and all the little girls are super excited for Christmas. Oh, super excited for Christmas because it's Christmas Eve. And some of the big grown up little boys and girls are excited as well. But as every grown up boy and girl knows, at some point in your future, in the middle of the night on Christmas Eve, you'll be visited by a ghost who'll wake you up and start shouting at you about your investments. And that's the ghosts of futures past, and we're going to be doing a little bit of that in today's show. We're going to be talking about these futures charts, looking at the past and seeing what people thought in the past about how the price of things would be in the future, to see what the future has in store for us in 2026. So it's the ghosts of futures past. Looking forward to 2026. Next week is going to be great. TradeSpotting and I are already talking about great things that we're going to be doing. Looking forward to the 2026 year and what great investments you could be thinking about. What ones we'll be thinking about for the year and how we'll be trying to approach it. And we'll be talking about that in next week's show. So I've got a great content looking forward in 2026 as to what investments to make. So be sure to be subscribed for that. You don't miss it. This week, what we're talking about is how the economy is really doing, because we've had some really great stuff out recently explaining the way the economy is working. Last week's show was a real bombastic one. Definitely worth watching if you missed it. Where we explained an awful lot in a very short period of time about how the economy actually works. And you're going to want to know that if you want to be best positioned to understand the macro and the micro story as it is right now. Of course, today what we're doing, we're not going to repeat all of that. Of course, it's all going to be fresh stuff. And but it does have some relationship with it. That's the Bitcoin chart I've got up in the background at the minute. It's a bit messy, but it's fun to open up a show with a bit of a messy chart. The big news of today, if you didn't know it already. Merry Christmas, by the way, happy holidays, all that stuff. I know Americans are sensitive about whether or not you say happy Christmas to people. You're supposed to say happy holidays or something if you're talking to them. Americans, I don't know if that's a woke thing or if that's just or if I'm crazy for calling that woke. But I just say happy Christmas to people. So happy Christmas, everyone. And put comments in below to let me know if I should be being more woke about that or not, or if it's not even woke to say that, or how you like your yokes in the morning. What we're looking at is all-time highs today, December 24th, 2025, all-time highs. That is the prices in the index here, the S&P 500. Have never been as high as this, ever. And you could be putting on your nightcap and getting your old candle out and walking off to bed, naturally thinking that you've had a brilliant year. And when you've got your nightgown on and you're having a snuggly wiggly rest, a scary ghost is going to break into your house and start making you think about whether or not this is real or not, and have you got to be better positioned for next year, and how you're going to think about next year. Where are we? What's happening going into next year that you need to be aware of so that you can trade in 2026 better than you did in 2025? And right now, all-time highs, you'd think that that's the whole story, but we explained this last week, and that's why it's worth recapping about a bit of last week. This is the Russell 2000 chart, and as you can see, it is not in all-time highs. It just isn't. Here's the RSP chart. This is equal-weighted SPX, right? Equal-weighted. So it's still the SPX, still like the S&P 500. It's just equal-weighted. And you can see it's also not in all-time highs. So if it's not in all-time highs and the Russell 2000 isn't on all-time highs, that's not great. And that's cause enough for that ghost to come knocking on your bedroom window. So it's we'll try and make it more Heathcliff than scary type of ghost. And not even a morose ghost. One of those try and make this Ghost of Christmas less Charles Dickens and more like one of the helpful ones from the portraits in Harry Potter, that sort of thing. So what's the story here? We need to dive a bit deeper and understand the economy. If you're enjoying today's show, by the way, you might want to take part in the Christmas cheer parade that's happening right now. 12 people have already done it. A target of 20, just to spread Christmas cheer. All of you will be getting a big shout out who's been taking part in that when we get round to the big shout out section of the show. Of course, that's a really good one. If you were looking closely at my remarkable notes that popped up on screen just there, on off, there they are. Ooh. You'll have seen a couple of tickers that we'll be taking a look at to try and get an idea about this underlying health in the economy. So we have a question, obviously, that's a question, you could maybe call it a hypothesis, which is that if the economy is doing well, then the middle of the economy will start to go up a bit more. And that middle of the economy thing, this Russell 2000 thing, has a ticker of its own in the Ghost of Futures Past. So we can get this on topic, moved off of RUT, and now we're into Ghost of Futures Past. That's right. Get out your campfires and whatever. That's the wrong one. Put on your mittens and get ready for a Christmas horror story. Nightmare on Christmas Street, as a ghost visits you to talk about how this futures chart has not gone into all-time highs. That's the scary story. So it's more of a friendly ghost, but as you can see, there has been a really positive trend, etc., towards the top side. But if we're looking at the middle belly of the economy and saying that it's doing really, really well, we're looking at this RTY1 chart. And what could you call that if you wanted to think about it in a particular way? You could call it the domestic economy. The domestic economy. And why is it that a YouTube person talking on YouTube, talking to people out there in their domestic places, would want to talk about the domestic economy? Because that's thanks Jamie, that's a Christmas cup of tea from Jamie. Awesome, brilliant, thank you so much. It's tea time with Rocky, everyone. Tea time with Rocky. No tea, that's fine, have coffee. And it's the domestic economy, right? I mean, the domestic economy, that's the economy of your life and my life, our everyday lives. And if it's not in all-time highs, but the SPX is in all-time highs, are we expecting things to get even better or not? And we can take a look at a couple of kind of safe havens and ask a question about that. So let's just go first off to USD JPY, right? It's the nice safe haven. We're going to check in here. I'm not using the futures chart here, just wanted to use this one so everyone can understand the ticker that we're looking at. And this is been going up. So it's a safe haven asset that's been going up. That doesn't sound so great for the economy, let's be fair. But that's been happening for quite a while. Maybe that could reverse. Good question. Here's another one. I'm not going to bother with the futures chart on this one as well, actually, to be honest. It's going to open up the gold one. I like to use this on YouTube because it's really easy to understand ticker. When you're looking on TradingView, just type GOLD in your ticker in the box and you'll get a gold chart. And you can see here, this is obviously at all-time highs as well, kind of currently. So that's not great for risk-on type attitudes. So we can take a note here on my notes thing that there's an element to do with risk on question mark, and it's like, well, is there risk on or not? And that's going to help us kind of look to 2026 when we're trying to make our way back to beds after we're done with this Ghost of Christmas Past. And we're going back to our beds for slumber on Christmas Eve and thinking about the big goose that we're going to have tomorrow. Then we can talk about risk on, because then that gets us in the mood. But what we're looking for next on this story is to kind of understand, well, if gold has been up high, it's risk off, then how have just equities been doing? Ghost of Futures Past chart taking us here is the ES chart. As you can see, it's the one that's in all-time highs right now. So equities are like risk on, but gold is risk off. It's like really, really high. Risk on for gold, but risk off for everything else. So there's a tension in the economy. So we understand that that's a big deal. So what other things can we look to then to try and understand? So see everybody in the chat's keeping up with what's going on here. It's great to have people that can follow along with this type of chat. You know, what's the value here, Rocky? The value here is that if you can understand this type of chat, follow along with it really, really well, going into 2026, and asking yourself the question, you know, is this going to be the year that Trump actually delivers on who Trump is? Are we going to get the Trump card next year? It's going to be a Trump bullish call next year? Are we going to have malaise, a sleepy Joe Biden-esque disastrous type of malaise? Is that what's going to happen? Is Trump really going to attack the economy the way that Sleepy Joe did? I mean, Sleepy Joe, you can forgive Sleepy Joe because at least he had dementia, but Donald doesn't have it. So why is he doing this to us? Is 2026 going to be the year then that this happens? Or has Donald Trump done it for us? Is the SPX futures chart, which is here in all-time highs right now, Christmas Eve, showing us actually it has been delivered on or not? Or does that tension exist? And if the tension is resolved in a bullish or bearish way, so is the tension going to be resolved next year in a way that's kind of bearish for the domestic economy, which is the economy where you have your job and where you buy your items that you use on a day-to-day basis and who all your friends work for and everything else? That domestic economy of stocks, the Russell 2000, is going to help them, it's going to help you. It's going to be one of those years where you look back and you say, this is brilliant, this is the Trump we voted for. Or is it going to be the one which is the Trump that the guys who turned up in the back row, you know whenever the inauguration thing was happening, or whatever it was, the one in the room, it was cold, it was very cold, so they had to do it inside a room, and in the background you had Jeff Bezos and you had Facebook guy, blobber face, and you also had all the other ones, Sanjay McGoogle, right, the guy that leads the internet searchers. You had all the big guys in there. You also had what do you call it, the guy that's the head of Nvidia, Leather Jacket Man you had in the audience there. They've all done really, really well, but you and me haven't done so far. So that's kind of where that tension exists. And as you can see, while Mr. Huang Leather Jacket is having a great day, and Mr. Mark Blobberberg is having a great day, you might be having just an okay day. An okay one. It's obviously not a disaster because it's near all-time highs, but the question then would be, if this can go into all-time highs, it's going to be happening at the start of 2026 then. So is that going to be because everything's gone risk on? And if it has, then do we keep our eyes on gold for a correction of some sort? We did call for a correction back when it was at 4,350, and we got one down to 3,890. So that was cool. And we talked about a system in the market, a stranglehold in the market. It's happening. So you had like gold, if you remember from a while back, equities, crypto. Just going to kind of really boil this down to a couple of super basics, but you should definitely check out my live show, my library, where we explained all these things. And you've got this, and I explained how this was creating this circular effect, which is putting a stranglehold on the economy. So that was a big topic from the past, and we explained that already, and we did get a bit of a correction afterwards, but it hasn't really corrected. It's actually just continued to go higher, which is super risk off. If into 2026 we see a bit of a risk on attitude emerge, what will that look like? That's the big thing. As I see people in the audience chatting away and having a good time, it's good to see people laughing like T-Ball Headings at the Leatherman joke and the likes. Good to see you chatting. So what do we see? What does that look like? What's that smell like? What's it feel like? What's it like when you get under the covers with it and you snuggle up at night time and you say, everything's gone risk on, baby, risk on? What would that look like? Would it look like this going higher, gold going higher, or would it have a correction down? Looking at this daily chart for gold with the flash, rocket crop flash down there at 3,398, I would love to see that crash happen as part of a story of a move towards a risk-on economy. That's something that I'm looking for 2026. Big highlight probably in there on the chart. Zoom on in so you can see it closer. Let's zoom on in for a second. Zooming. Yes, this number is the 2026 number that I'd be looking for a big old correcty on the gold. If that happens, will you be pooping your pants because the whole economy has gone to poop, including gold, and everyone's got into money? Or what? Well, this here being so high is linked to something else. It's linked to like a couple other things like Dixie, which is definitely going to be our next port of call here on this story. The Ghost of Christmas Past. Get your nightgown back on again. The ghost is dragging you to a new chart. Come on, get out your candle. Get your wee night hat on. Come on, get it out. We're going on another jaunt looking through another person's living room window, and it's DXY. This drop down. So if this is dropping down, right? Then it means that like if a barrel of oil was $100 one day and it's $100 the next day, but the price of the dollar itself has dropped down, that barrel of oil has got cheaper for people. So that's pretty good, but it kind of signals maybe a weakness in the economy. Does it? Does it not? There's a confusing story here, and it comes and but don't worry, it makes you smile. So we're going to be talking about that in a sec. But hey, you know, this one's been going down, and as we also know, like this year a lot of other things have gone down. Some various stocks and cryptocurrencies have gone down, so this has gone down. Also oil's gone down. So the story which used to exist in terms of this going down means better things for oil or crypto or some other asset is not really held true, currently. So what is that kind of to do with? It's to do with this amazing story. And like I said, it makes you smile. Makes you smile. It's the Dixie smile. It's the dollar smile. It's an old theory from the old technical analysis, trading, investing, fart heads. You know, the ones that made the world. Those ones. All the boomers. But the boomers, you know, for the boomers, back when the boomers weren't boomers, they were just kids booming. They're the boomers of the boomers. The pre-boomer generation invented all this crack. So there's a kind of, if this is the value of the chart, you know, if there was a drop down and then a move back up, then at this point here at the lows, this can be kind of when things start to kind of turn around, because it's a happy story that has got a happy ending with this one. But during this period at the start, often, you know, there's problems. This could also be a complete inversion, right? Which is a funny thing about the dollar smile. Could actually be that at the start of this year, that's when everything's kind of booming, and then things push to the top side afterwards in a sad way. So there's this concept of the dollar smile. Don't need to get any more detail than that. That's good enough for our YouTube audience today. But if you want to get in a deep deep into it, tag me in a message in a room related to this concept, and we can talk about these things more in the Discord, which if you're not a member of, you should be. You should be a member of. Great stuff in there. You can join it for free. https://www.discord.gg/Rocky Outcrop. All one word. Yeah, even your granny could follow those instructions. They're that easy. So if this is potentially the area where you could have a dollar smile happen at, right? Let's have a speculation for a second. You've got the flash, which had this target on it, which was then filled, and you've got this period where it could be turning around possibly, and then it could go on up higher. That's a possibility. Now there is actually a risk here that the dollar index goes lower. I think that there's a pretty solid chance that it goes down to 91, 92, but would that be bad? Well, actually, maybe not. Maybe not. This is the Ghost of Christmas Futures Past, looking at the charts here, talk about the futures, and tell you that this part here, as it goes, is from the sort of dollar smile idea, is going to be, for us, represented as a pain period. If indeed it does crash a bit lower, that's probably going to work out kind of roughly okay. Roughly okay. You'd want to see the underlying reasons for that, stories about how the economy's doing and so on. But this is pretty good, you know. A lot of the reason why this has been going down is because the JPY has been going up. We talked about it earlier on. Risk off, risk on. How's it going? That JPY chart needed to have a bit mentioned on it, by the way, that it was also because Japan has changed its mentality. But that's going to be brought up again when we're making our way back to bed to think about risk on, because we want to get under the covers with a bit of risk and feel frisky. Because we're going to leave that stuff to the later. But this here's the dollar smile chat, right? That could be happening. This could be the area where it starts to round out. Might need to come back down and test 96. Phew. We can get a little taster for that if we want to see how that could go. Could that be the start of something frisky? But we want to see if it can push up. But then again, you know, anyway, the point here being that this whole section that I'm drawing into is in 2026. Goes to Christmas Futures Past, coming in here to talk about the future and bring you into the future by talking about the past. Next week, we're going to actually be talking about the actual stocks and things that like actual equities and things to maybe think about for how they might fit into a risk on narrative, or what defensive stocks you could take positions in if that doesn't work out next week, that type of thing. Subscribe, hit the bell for that. This week we're talking about how you can look at it so far, and what this amounts to, by the way, is creating a list that we can use as a watch list, and I'll be putting this to be shared inside the chart, inside the Discord, sorry, so you can check these charts as well. So I'll start creating this watch list now. And of course, I'll just start on where we were. I'm just going to add Dixie to it, because this was a story about the dollar value. I could look at futures on Dixie and stuff like that, but it's going to keep it fairly clean and simple. But there are things that I would prefer to look at in futures, so they will be used using the futures chart. So another part of this story is going to be HG1, and we'll be moving on to that one next. Exclamation mark. And that is because it is Dr. Copper. So if you're looking at this and asking about whether or not your economy is starting to smile but you can't tell if it's because it's feeling sick or because it's about to get really into a good mood, and you're looking at to diagnose what that smile is, you can head on over to Dr. Futures or Dr. Copper. What's the worst that could happen, right? So that's the first one of our futures underlying market health check for 2026, right? So I'm the ghost of futures past. I've sneaked into your bedroom in the middle of the night, woken you up, told you to put on your knapsacky hat thing, and you get your candle that's got the brass thing for catching the drips, and we're looking at the futures charts to see how people in the past thought about the future, so that now looking into the future of 2026, we can understand where the future is. Just like Scrooge McDuck did in the famous story. Do you remember when Scrooge McDuck did that? The wee boy comes along, little skinny wee boy, and he's outside the window and he says, Scrooge McDuck, Scrooge McDuck. Scrooge, open your window, Scrooge. And he throws a snowball up at him. He says, you're a right stinking sod. Give us a goose for Christmas. And he says, I'm not giving you a goose. Get out of my garden. He says, get out of my garden. And he goes back down to his office and he does some office work, and then he goes to bed. Then he gets a candle, looks a bit like this kind of cup thing, and he goes along to bed. Ghost comes in and he says, wake up. And they start having, looking at the futures charts and doing technical analysis. And that's what we're talking about here. So the next one that we're going to be looking at is after we take in with the doctor to see how the future is going to turn out for us. It's going to be LBR, right? LBR 1, exclamation mark. What should it be? This is lumber, of course. So we've made it to the goal, by the way. And I want to wish everybody out there a great big Christmas cheer. We're going to be mentioning everybody who took part in the fan funding in the show, giving you all special shout outs. Doing another goal just now here. Going to do up the ante goal, right? Up the ante goal. This is the buy a new Christmas jumper goal, right? And it's just for fun. It's 10 super chats at $5 over the period of the next 15 minutes. And if we arrive at that thing, then I'm going to be buying a new Christmas jumper, maybe even a new Christmas jumper for me and 5 family members. So let's just see if we can make it there. Start the goal. Happy days. Let's see if we can get me a new Christmas jumper. Happy Christmas, everybody that's taking part in this stuff. It's a lot of fun. We're doing education. Who likes education? Certainly not me, a fan of ghosts and nighttime stories. What we're doing instead here is having a get around the campfire, even though it's not Halloween. We're doing a Christmas Ghost of Nightmare on Elm Street look back at the future's past, so that you better understanding the future. And the next one that we're going to add to after lumber. Now, wait. Sorry, lumber? Who cares about trees, man? Trees grow on trees. Specifically, they're the core tree growing aspect, and I think that's really answers your question, right? If trees grow on trees, then you want to know how the price of trees is doing, because that's going to tell you good information about the economy. That's actually funny, because I was kind of trying to make a joke, but that's actually true. What the actual kind of not funny truth is that people be building stuff, bro. And if they ain't be building stuff, then why? Because people don't want to be buying stuff, and so on and so forth. Does it indicate that there's going to be a squeeze in shelter? Does it indicate that shelter is just not where the money's to be made anymore? So these are the things that you'd want to look at the lumber chart for. We're going to be talking about that. We're also going to add another couple of things to this, right? Because we want to have this. When we go to the doctor, we're going to just get an idea or two. But as you know, with any doctor, all the doctor does when you go in to visit him is you describe your symptoms, and he's kind of typing on a computer in the background going, That computer he's typing onto is hooked into this amazing doctor's resource called Google, and he puts your symptoms in there, and it comes up on screen and says, "Oh, you've got brain warts." So then, of course, the doctor turns around and diagnoses you with brain warts, because that's what Google said, and advises you, because you're not a doctor, that when you do your own search results on the Google Doctor network, that you need to then consult a doctor afterwards to make sure that those results were the correct results before you get your cream. And so we're going to have to go and do that ourselves, right? That's what we have to do. It's what the doctor tells us. We'll add NASDAQ futures to this one, just because, I mean, we've talked about We've talked about some great stuff with regards to futures recently, but NASDAQ deserves a mention, doesn't it? And then we're going to add the 2-year T-note futures to our wonderful list. If you're wondering where I'm getting this great information from, by the way, it's over here in my notes. That's why I'm looking down at the right. I've got my Remarkable with me here. If you're wondering what I think of the Remarkable, looking for a review, I would say it is remarkable. That's right. 10 points if you saw it coming. So we also have VX1, right? VX1. What is VX1? Well, this is the nuts and bolts of a Christmas futures past ghost story, right? Because it's the volatility index, the fear and greed index, and of course we all know that Scrooge McDuck was a very greedy duck, and that's why he didn't want to give out his to the poor children of Nottingham Forest whenever it got to Christmas time. But is there fear here, or is there a happy moral ending at this Dixie Smile story? We're going to add the 2-year note futures to this one. Why? Because that gives you an idea about what people think about interest rates, and this is like the silver lining of your neighbor losing his job. Hopefully not you, but your neighbor, because when that happens, then you have a chance that you will get a cut in interest rates, which might just keep you looking at your future in a more positive way. So it's like when your neighbor gets sacked, there's a better chance that you keep your job. Is that a fair thing? There's a great song. You know that song by James, Getting Away with It All? There's the music video for it where they go and they talk to people on like Wall Street and stuff, or in New York. They ask people what they think, and they listen to the song and they tell them, and they say, hey man, one of the guys says a guy in his job got laid off. Lots of people were getting laid off, and he was thinking, oh my goodness, it's going to be me or the other guy. And I went home and I listened to James all night. I came into work the next day and the other guy got laid off instead of me. And it's just a brilliant music video, and anyway, it's got a positive story inside it, and we should all take part in that. Another part of the story is, of course, CL, the futures for oil. We'll be taking a look at that, and then other things that I think you should probably add to this are going to include, because we've spoken about them already, I'll just add the Russell 2000. Good look at Russell 2000 futures. Should have done that possibly. Oh, I've got it on there. I've not got it on there. Just keep it as Ghost of Futures Past. Sorry, yeah, that's what we want to do. We want to have ES on there. Ghost of Futures Pasts. I want to have, let's have Bitcoin futures. Let's have a micro Ethereum futures chart as well. Like let's be super cool about it, right? Yeah, let's be cool about it. Let's go for that one. And we'll also add on, what should we just put on the others chart, right? Because you're not going to get a futures chart for others necessarily, or aggregates them together, but we're going to take a look at that too. And now what we have, after all that hard work, well done everybody, give yourself a pat on the back, you've done some great hard work there. We have an amazing list of the underlying health of the economy. So let's go and visit Dr. Copper first of all. Dr. Copper says the economy is doing very, very well. One of the reasons why is perhaps because copper is used in things like semiconductors, which has been doing really, really well in the SPX. But the middle of the economy hasn't been doing amazingly. But is this also because, let's ask Dr. Copper, is this because the people are building houses and using copper to put electric wires in the houses and stuff like that? Is that a sensible thing? Have they been doing that? We'll check. Let's go from this chart to check another one, because this isn't in all-time highs, but what if it went to it? So, and as for the underlying state of the economy, this is very, very positive. Put this on a monthly chart, you can see this is not only like, all-time highs is sort of used loosely talking about recent time frames. Now this is like right now all-time highs. Negative bearish case, by the way, since it is a ghost, so ghost says, ooh, here's the bearish case to go along with that, so time to get your brown trousers out. And this is the, of course, if there was a fail in this super cycle, the commodity super cycle, which you could say started back in 2009, then we'd be looking for a drop down to the lows that we saw back in like 2020 and 2016 and stuff like that. Would that be so terrible? Would it be so terrible for the middle belly of the economy if something like that happened, though? When we know that the middle belly hasn't profited from these all-time highs. A drop back down, I think about things like 2020 and then the rise up that happened after, and 2016, I think, oh, the rise up that happened after was quite good. wouldn't mind too much to see this thing dropping, but Dr. Copper is a barometer for the economy. If it is doing well, then the economy is going to go up, yo, bro. So this says up, and then if it does drop down, I'm not going to be too worried if it goes back to those levels, but there could be some pain. That's something to look out for. Where's it coming from? Is it because of semiconductors, or is it because people are building houses? And if I look at the monthly chart for lumber here, you can see a massive drop down in lumber. Go back to Dr. Copper, just click, big push up in copper, simultaneously big drop down in lumber. Interesting. And this lumber has got a different type of story for us. Yes, that's right. This is where your pre-show prep comes into hand, Rocky. Well done, well done. Good work, man. Good work. So the why this is an interesting part of the story is because look at this middle belt that the prices are trapped in right now. I think it's fairly clear to see that if the story of the next year is one where 2026 is very bullish, then we might see the copper, the lumber chart be kind of bullish like that. If it's going to be that next year is bearish, we might see something like that for if it's going to be bearish. So now what we have here is a question which has come up because we can see that the futures for stocks here at all-time highs. This is just your regular kind of off-the-shelf stocks. Then you've got your whole need to speak to a nerd in a back room about your stock chart, which is Nasdaq. You know, we need to get them to come around with their big thick glasses and put all the wires into your monitors for you. That's what you need. That's right. That's a 1990s stereotype, and that's what you need. A big, amazing technological stock revolution. But that kind of runs in if that's happening, then why is this one Russell not at all-time highs? Actually, in the monthly chart, funnily enough, the monthly chart is at all-time highs in the monthly chart. It's kind of worth pointing out. On the daily chart and stuff, it isn't, which is where the crux of this story came from. Because we're going into the start of next year, are we going to see positivity in the middle belly of the economy? Because if we do, then it's going to come from a certain couple of reasons, and those reasons are going to help with other things, like the others chart here. So one of the ones that we didn't actually look at here, though, of course, having looked at lumber and made this point about the middle belly of the economy, and if we see it being kind of bullish, because your job at Costco is affording you to build a whole new bedroom onto your house so that you can be the next like YouTuber caught for having done something dodgy with a underage person, right? That's the wait, what's that in reference to? I don't know. Esoteric chat. It's funny. What about this though? If it's going to go so well in middle belly economy, so you can afford to like add a new pavilion to your house, then we're going to see the lumber prices go up. And if they drop down, then that's going to be a signal something bad in the economy. Maybe the Dr. Copper's only been doing well because of the stocks, which are also doing well, pushing these indexes so high, so high, such as those tech stocks. Or maybe it goes to other areas of the economy and we start to see it go into these type of stocks here instead, in which case maybe lumber goes up. And I think that's kind of going to give us our little kind of cycle of things to look through to see if there's like more positivity in where it is and where it's leaning. And what we've looked at, by the way, in this chat here is, of course, industrial demand, which is to do with copper. We've looked at housing health, which is to do with home construction. That's the lumber one. The domestic economy, which is the Russell stocks, RTY. It's the health of US small to mid-sized businesses. We've looked at tech and innovation charts. We know that they're doing well because Dr. Copper told us to look there, and that's the Nasdaq and Q1. And we've not looked at so far the three remaining ones on my list. Interest rates, 2-year interest rate charts. What are people thinking is going to be the future of the interest rates? Then we've not looked at fear and uncertainty, because that's the scary part. And we're all scared of the ghost of futures past. And we've not looked at energy costs yet. An interesting thing to start with is going to go at the end of this story is energy costs. Energy costs. Oh, there's another that's missing off of this. Actually, I should have thought of. What's it called again? High, something like HGR. Is it HGR1? HGR1? No, PR1? No, wait, hold on a second. Steel CME futures ticker. Just a second. Can't remember absolutely everything in the world off the top of your head. HRC, that's it. Ooh, hot rolled coiled. Hot roll coil. It's like sounds like the place that Saul Goodman went and got a job. Hot cinnamon rolls. 1! Exclamation mark. US Midwest domestic hot rolled coil steel. My goodness. Ayn Rand would eat her heart out at this. You know what? We've been talking about Dr. Copper. What was the guy called in Ayn Rand? Ayn Rand. No, I don't need to have her name in it. Atlas Shrugged. That book. Atlas Shrugged. A guy that had copper mine. He was called Francisco d'Anconia. Yes, Francisco d'Anconia. So here's one for all the highly erudite wasps in the audience who, of course, have read this and use it as their Bible for conducting their daily business life. If you don't, you're missing out. Have you not even watched Mad Men? And then a shout out to everybody else who just lives in America and so on, had this as submerging their conscious story without even necessarily knowing it. This is like the as Huckleberry Finn is to writers, and as Lefebvre's reminiscences of a market operator is to traders, the Atlas Shrugged is to everyone else invested in capitalism in America, more or less, right? And one of the protagonists in the book, the antagonist in the book, is it though? Ayn Rand, after 480 pages of drudge, does flip the script on this and makes it so it's like, was he a protagonist, or was he an antagonist, or was he a protagonist? After all, it's Francisco d'Anconia, who of course runs the world's largest copper mine. In the story, right, he pushes the price of copper up, and everybody's buying the gosh darn copper from him, but in his copper mine there ain't no copper. He ain't digging up no copper. And actually his goal is, as a really nice Mexican wasp or something like that, I'm not too sure where he's from, maybe he's Italian or something like that, he decides to help speed along the descent of markets because he thought that was kind of helpful. It's part of the story. Anyway, he does that. It's a childhood friend of Dagny. He orchestrates the construction of a seemingly massive but ultimately worthless copper mine in Mexico, causing huge losses for investors, including James Taggart, poor guy, and contributing to the economic collapse that ultimately leads to the striker's return. Was he an antagonist or was he a protagonist? Interesting how there's so much overlap there when we go and visit Dr. Francisco d'Anconia over here ourselves and ask him, is this mine that you have actually worth anything at all or not? Because if it isn't, and lumber also dumps down, then 2026 is the year of having to wait another year until Trump 2025 turns up. Or we get Trump 2025 in 2026, and copper actually turns out that Francisco did have copper in his mine and delivers it on the trains, and everything's fine. That was some incredibly erudite information for everybody. Sure you love that digression. So that's the story. We're going to take a look and say, well, oil has been going down. Oil. Like, is there a mitigating factor here? Well, there absolutely is, because the world is trying to push the price of oil down. Because it's when America says it's going to do economic sanctions on Russia, and they're going to be even worse this time. We wait until like a couple of years into the war, and they finally do a sanction on Lukoil, and it does help push the prices low, but they keep rebounding. If the economy is going to have underlying strength, then maybe it just keeps pushing up. But there's this massive turn on the taps thing that's happening right now. You could call it turn on the taps. You could call it U.S. Coast Guard lacks forces to seize Venezuela-linked tanker for now, sources say. And if this for now becomes 2026, and this war, which has massive casus bellis, by the way, I mean, those fishing boats are absolutely full of fentanyl. So we better get in there quickly and liberate all of that Venezuelan oil. Get it out of dirty Hugo Chavez's mittens, right? Because we don't want him having it anymore. Wasn't you telling me? I hear the audience saying it's not Hugo Chavez anymore. I know. It's Che Guevara or some other stinking commie, right? And we've got to get in there and sort this out and help push these prices even lower if we can. That would be really, really great. So anyway, big stuff's happening in the oil world. Something to keep an eye on for 2026. What did the Ghost of Futures do? He took people into the past. He took people in the past. I need to do more of that. Sorry. What I wanted to say here. This is the story. Let me go to like the weekly charts. I can do this with a bit more pace. Looking up here, do you remember 2022? I'm the ghost, remember now, and you're Scrooge McDuck and I'm a ghost, and we're looking through the window into somebody's living room, and it was the futures past chart. This is the futures chart for oil, and they were looking at the past. So this is why the metaphor and the joke and everything in the title of the episode and all that works. And if you look at that, if you remember in the past, in 2022, oil prices were really high and then they went down, and during that period of time, the sort of altcoins and so on, and the middle belly of the economy, plenty of companies haven't done really well, but some of the larger, better players have done well. And the larger, better players have had money, so they didn't have to borrow money. And the other ones that are like trying to grow had to borrow money because they're doing the American dream, right? The American dream, which is that anybody can achieve anything in America, which is what Donald Trump's there to help with. And then there's the other guys that had the old money, which is that screw the American dream. I've got legacy money. I'm going to live off my grandparents' wealth. And the ones that were doing that, apart from Mr. Leatherman, have to say, well done to Leatherman. He's come in here as a guy who may possibly even be American, I'm not sure, and done really well on that American dream thing. So well done to him. I've got no idea if he is or isn't American, but I do know he has a leather jacket, and I get kind of Elon Musk vibes, and I know that he's South African, but I'm thinking if you add leather jacket together and let Elon Musk vibes, and you think about how it's got like a Western first name, he may well be American, right? So I'm thinking that that's American dream story. But they're trading in America, and America gets the money, so it's still American dream. But the other guys, they had rich parents, and he probably did too. I don't know. I'm just saying he has a leather jacket. And the point really is that the ones that had money and didn't need to borrow money because they were making money is one thing. That's the capitalist idea. And then there's the old one, which is like, they had better deals on their credit because they were a bigger company already. It was the rich get rich and the poor get poorer, not the American dream at all. So if we're going to return to like an American dream story, then maybe it's time that we took a look at the ZT1 chart, right? ZT1 chart. Weekly chart. Let's take a look back in the past. February 2021. Look at that. We're trading high. Dropped down to like 2023, 2024. These were the peaks in the interest rate. It was down low. High whenever the interest rates were low. Okay, this is a quick guide to this. We're looking through somebody's bedroom. No, if the Ghost of Futures Past wasn't a sordid tale when you went to look at the past activities in somebody's bedroom. You're looking through the living room window at past charts and looking at the past here and seeing in the past when interest rates were low, this thing was high, and when interest rates were high, this thing was low. And recently the interest rates thing looks like it's going towards the top side. So if you're going to do that thing that Dr. Copper told us to do, where you draw a chart formation on a chart here, and you make some sort of assertion as to the potential measured move that could come off the back of it. Let's say that interest rates were to go like down a lot, which meant that this thing went up a lot. You could be looking at this going all the way up here to this sort of target. Great, cool. What would that do? That would help an awful lot. That's really good because you need that if you're getting frisky with risk end of the night story. So steel, I think, could be the one that cuts the middle of the story, cuts down the middle between copper and lumber, right? Because if copper is just in like the semiconductors and lumber is in just in the houses, then steel's in a little bit of both, right? Steel's in a little bit of both. So this one here in the monthly chart, you can see that we're back up towards highs of February 2025. But as you can see that there were highs up here in 2021. But what I wanted to show people when I was looking at this steel chart here and to next year was, and I think this invites a look back at all of the charts in the past, is to look at when there were these big rises up. And when those big rises up, there's one there, there's one there. Those arrows, I thought initially would make it look less like a child's drawing of a front bottom, but actually that just made it into an instruction map. So there you go. So when you look at these things, that's the chat. So in these periods of time when there was like big moves up and stuff, that's interesting, and especially the ones which break prior structure. So if this one had a move up and then broke prior structure and went into this zone and had a big move up like that, what would that maybe be associated with? And it could be associated with those times when things go good. If we look back to the last time that people waited for Donald Trump to turn up and then he eventually did, that would be back towards 2016-17 periods, and there was a move up there that kind of showed you there's something happening. I'd like to see a move up happen as part of this story over here. Of course, then as well went into 2018 and we had this rise up during that period towards 2018, which was a good period in Trump 1.0. And here we are in Trump 2.0. Things have kind of like tried to get back to a position where you could say that they're about to be able to make a decision, just like the lumber chart. And this decision that it makes could be a signal towards a bigger macro health part of the economy, which is great, because if interest rates continue to drop or are able to drop, why is that going to happen? It's going to need to have a few things happen at once. The health in the economy be fairly strong, and for the but at the same time, businesses to not be able to hire people really that great. So far we've seen that the hiring rate has potentially triggered the SAM rule silently in the background, but it's been doing it gentle, and it had this could resolve into a question of whether or not the Fed want to have a soft landing or like a hard landing, or just to have a great super duper, we don't have to mention it at all, everything's in a bull market. And the language that they use to describe things, despite the fact that however they describe things doesn't change the fact that what happened has happened, it does have a massive influence on how people think about the future. And so right now they're very caged and guarded in what their story can be, but we know the underlying factors are there to be seen. At the minute, Dr. Copper is telling us that the economy is looking at a point where it's quite strong. And we also see the same reflected in NASDAQ and ES1, but we don't see quite the same reflected in the Russell 2000 futures necessarily. While these are all-time highs, they have not gone much past their previous highs. So the growth over a 4 or 5 year period is minuscule compared to the growth over here. Now, those on NASDAQ or on ES1, which have got far more exposure to like copper right now. So these things being high together makes a good deal of sense. But will we see that trickle down in any way? Will we see it affect the economy in any way, as it's supposed to do as an overall metric for the economy? Or is it still going to stay concentrated? And one of the ways to see that spread out is to look at our pals over here in terms of lumber, which has got a great middle, it's right in this middle belt, so it's got a pivot coming up, like it or lump it, that's what's going to happen. It spends no time in here, and when it's below it, it's bad. When it's above it, it's good. But we look back to like 2024, bad, right? Look back up to here in 2025, good. So it's had volatility here. So we want to see this, of course, be as a part of a volatility metric. We also want to look at steel, because this is showing us also great clarity where this trend could go. Down below means that you're bucking the kind of the trend for the last decade, because we look down towards lows here, then that's looking back to 2020 and 2016, 2014, stuff like that. So if you're going back in terms of reaching towards 2015 prices for steel, hardly speaks to a really strong underlying economy. But if you're looking anywhere back into the range up towards November, up to 2020, the 2020 push up, then fantastic. Right now prices of this are around about 2018, so we're looking at a year in 2026 which could be more like 2016 in one way or another, in terms of moving between one trough and a peak and a trough, and that actually could be very healthy for the economy, especially if we get the 2020 upward style movement, whenever there's not an actual literal shutdown of hundreds of millions of people around the world, when it's being used and it's actually being used. We've had to suffer a few years of consolidation within the range after having put in lows in 2022. So we spent a few years never making it to be saying that we're bullish anywhere like we were in 2020, but we're also know that we've not gone into the negative territory of being worse than we were in 2022. So steel is giving you the most closest relationship link alpha correlation with the actual economy in terms of you or my life right now. So this is why this one's extremely interesting and very much could be giving us some of that ghost of futures looking at 2026. Good to know in 2025, towards end 25, so that in 2026 you know it, as opposed to not knowing it in 2026 and thinking, I wish I knew this in 2025. Well, check it out, Scrooge McDuck. I'm the ghost of futures past, and it's 2025, and let's look at the past and see what it's like for the future. The next, obviously, the big one for us is to then reconcile narrative in the background. We've got big stories like war and so on that influence stuff like this. And that means that you can look at oil, because oil's got its own stories right now, which need to be resolved. However, a drop down here would be a confusing picture, because this would indicate like perhaps the economy has gone to crap. But imagine that there is a drop down here while lumber goes up, while copper continues to do well, and while steel, well, copper doesn't crash, and while steel or enter a bear trend, and steel also moves back into some of that previous range that the economy feels like it did running into 2020. And that might be very, very good, right? Might be very, very good. Might be very, very, very good, because this would be cheap to do all of these things. If you're like building a house using petrol to power your house building equipment, which they do, by the way, because I've looked into this. It's very technical, but they use oil to do all this crap. So if it costs you less, because I've looked into it too, they use oil to transport your groceries from the grocery transporting hub to the grocery distribution hubs. And this could be making all of that process extremely, extremely cheap to do, which would mean that inflation gets to drop, which would be great. Because if this drops, which it may well do, then it would be offsetting the inflation that would go in hand with this drop in, the sort of price inflation. If this is being a move down, whether you think about it from this high or this high, and it's a move down, and that is a part of what's known as the smile, the dollar smile, then this phase of it moving back up, or indeed if it moves down to test the 200 simple moving average over the next wee while, but we're looking at it into how we can go into 2026, and I really am thinking about if this has some movement up towards the year, maybe that's part of that dollar smile, which would be interesting as well. So the dollar could be under pressure, which might not be a bad thing. Why would it be under pressure? Well, maybe it'd be under pressure because the jobs and the economy are kind of slightly under pressure, which would mean that the interest rates might need to get cut. Or because the jobs and the economy isn't under pressure, but inflation has come down so much that they can afford to cut this. Right now, the question is about, do they have permission? And last week I explained in great detail how it's a policy which is of one operating under constraint. It's a constrained policy regime. And that there is a policy trap and not a mistake trap. And it's a really interesting episode, really interesting, explains all of this. But that is, of course, what you'd be looking for, maybe to test the 200 simple moving average there, try and help support what? That middle belly of the economy. Which, of course, yeah, cool, you could argue is an all-time highs, but it's done very poorly versus its prior all-time highs, right? Very poorly. Are we going to see some real growth here? If we think about inflation in the year of like 2022, was that about 10%? Well, let's just imagine that these stock prices in 2021 had gone up 10% to cope with inflation, and compare that to where current prices are. Oh my goodness. Oh my goodness, they're only 10% higher than the closes. In terms of how much higher are they than the highs? Oh my goodness, they're only 5%. So it's either sideways on a real terms, that means when you include like inflation, growth basis, sideways, or it's a negative real terms growth basis. Oh, negative real terms growth in the middle belly of the domestic economy. That's what Scrooge McDuck needs to do, is go and look at the ghost of futures past through their windows and see how things could be lining up for next year, because cuts in interest rates with good reasons behind them, because there is underlying health in the economy. For instance, if these things are going up and there's cuts in interest rates because there's underlying economic activity and health and demand and that, but interest rates are being cut because there's pressure unduly on jobs, unduly because inflation has continued to relax, then that's great. And that speaks to a change in the regime. And are we going from a regime where liquidity is tight to where liquidity is loose? Or are we going from a tightening regime to a loosening regime. And in the middle of a tightening and a loosening regime is a sustaining, pausing, assessing, breathing, taking its opportunity to not make a mistake regime. And that is exactly where you find us. So does it resolve the question of, if this is a risk-off asset, gold? Well, that should have been on my thing as well. I'll share this. By the way, I'll put links in my video and that to the Discord community where you can find this, and you can discuss it, add to it, be a secret Santa to everybody else, and add something which tells you about the underlying economy here. Are there things missing? Yes, there are. Deliberate Easter eggs on my part to leave gaps in here so that people could fill them? Yes. So do you want to be the hero, the Christmas hero that fills in the missing parts of this underlying health economy thing? Yes, you do. You can do that in part of my community. Looking over here, gold, where this has been such as, wait a minute, gold, the risk-off, safe haven, the asset you buy into when everything's gone to crap. Why is that so high if everything hasn't gone to crap? Or has things gone to crap and nobody really noticed? Is this a reflection of the money supply inflation? And have we got to see something like this maybe drop? But also, if this is so high and it's a money and then this is part of the story, because it's like saying, hey, maybe there's a risk-off element, which maybe then explains why Bitcoin itself has been dropping for the last 3 months while gold has been pushing to all-time highs over the last 3 months. And if that's happened, if this drop is happening and it's an expression of a little degree of indecision because the markets don't know whether they're going to go risk on or risk off, and if there's going to be a loosening or a tightening of the economics, then this is a correction during an upward trend, which could push higher while we see stocks, etc., in all-time highs. Why is this not pushed higher? And this is great because it comes back to the question of what we said recently needed to change. So if you remember this, which I hope you do because you've been watching my episodes, so if you haven't, you should be a part of what we do here as a community, then you know, and I'm sure you do, I'm sure you know this already, that Bitcoin and Nvidia were moving step by step, like they were joined together at the ankles. If one went up, the other went up. If one went down, the other went down. Exactly the same. Why? Because the markets didn't know where they were going and just latched onto something like, you guide the way, and the one-eyed man led the blind. And we're talking about a relationship that's killing markets, as I mentioned earlier on, with this circular effect that's going between gold, equities, and Bitcoin. And that described 2025. And in retrospect, a lot of people might actually see this as being true now. What else did I talk about in 2025? Well, I talked about the need for the tail to wag the dog. And that there needed to be a change in the system that there is currently. Well, has there been that change? And we can see when we look at Bitcoin having dropped over the last couple of months while gold has gone up. And we look at here on Christmas Day and the Santa rally having brought stocks, US index, to their highest ever, looking at both ES and NASDAQ. But we're not seeing crypto at all-time highs, despite the fact that they moved together before, right until really recently. And we said that that was one of the things that needed to break. What can we say? Two things. One, crypto being down is bearish. It indicates risk off. Sure. But crypto moving on its own and not moving with a need to jump onto the back of the one-eyed man and say the one-eyed man lead the blind, because it has its own opinion about what's happening and people are actually investing on it directly to express their concern or belief with regards to the future of risk on and risk off. That change where it has its own mentality is in itself very, very, very healthy. Yes, it is a pullback down. But if this is a correction, that it also happens at the same time as correcting away from having been led by a different asset to being having to be able to carve its own future, then this could be the correction that resets it enough to be able to move on its own. But however, it's the big story from 2025 was the need for other things to move to. The other things that are far more linked to liquidity, how many dollars are in the system, the price, the value of the dollar in a basket of currencies like Dixie, to do with things like macro elements and flows in money, and of course its own narrative. And something needed to change to allow these other things to push up, for Bitcoin to push up, because the tail is wagging the dog. And that's why others exist on this chart. It's pushed down low. It's obviously come back down to test off of these lows here. And the story of 2026 being a bearish one for the economy or a bullish one has this right at its core. Because if we do see a movement up in the value of altcoins, then the movement up in the value of Bitcoin would be because there's new money flowing into the economy, into the crypto economy, and that would be a direct expression of risk. On the other hand, if we see that this is moving down the way more, and of course Bitcoin is moving down the way more, and this is a direct correlation with both risk on, risk off, and the liquidity in the system, then what it surely means at the same time is that interest rates have in fact been increasing, which is making this here chart drop. So interest rates would be dropping. I mean, it would be going up while this chart drops. My goodness, this is what happens. You got the wrong chart, the wrong charts, like on yield. Anyway, and that would of course mean that there is pain in the economy which cannot be overcome, because the remit for the economy, for the Fed, is to have 100% employment and 2% inflation. And the inflation's been moving towards 2, and we saw in the December figures that just came out a material change in UK inflation and a very good result in CPI for the US. At the same time, we're seeing that the SAM trigger, which is based on unemployment and has only ever indicated recessions were coming, should have been triggered, but hasn't been because the government shutdown prevented a piece of data being released. But we can synthesize that data and know that it would have been triggering the SAM rule had it been released, but it wasn't. So this wonderful exception gives an exorbitant privilege to the Fed to be able to control the messaging and have optionality on the narrative, which is obviously creating hesitancy in the markets, because people don't know going into 2026 if we're entering into a regime of gliding down interest rates, which would increase the liquidity in the system and allow the middle belly of the economy, the RTY, the RUTs, and the others charts of the world, just to begin to wag the tail of wag the dog, to be the tail that wags the dog being the bigger, more visible part of the economy, such as the big stocks and so on. So the likes of perhaps PayPal might get a rise up because business to business is doing better, because liquidity is increasing the system, and then underlying health is actually increasing. Whereas if interest rates were to drop and the underlying health drop in the economy and business to business also drop, then PayPal, as an example, would suffer massively, because it would now also be getting less interest on its own savings, because it's one of the companies that has money. And then it would be suffering from both the dual effect of lower customers and lower inflation, which is what a recession would be like in dragging the economy down. So when you see how these things can have an interplay and go together, then the opposite's also true, that if the interest rates were dropping and there was underlying health in the economy was going up, then those things would start to do well, which is the middle belly economy, which would push things up. And that, of course, refers to your Russells and your others. And you can see this happening and get a taste of what's coming in 2025 by keeping an eye on these charts that we've talked about and some others that show you the underlying health in the economy right now. And that is the Ghost of Christmas Past. It's an incredibly valuable, fun exploration, hopefully, for people that will be keeping an eye on to monitor for the near future. Looking into 2026, if we see the environment change to one of a gliding down interest rates in order to help address the not mentioned SAM rule trigger, which would indicate the economy would go into recession if nothing is done about it, the only reasonable explanation on a surface level, when you take it the most simple thing possible for why it's not being talked about by anybody in the world other than exclusively here on this YouTube channel, despite the fact that the data is hard data and is visible to everybody and you can look it up yourself on the Fred website. Despite that fact that I'm the only one talking about it, people know this because it's published on the Fed and stuff. So how do you reconcile those things together? Well, if you also know a simple truth that if the Fed came out and said the economy is about to go completely and absolutely to crap, like it did in the year 2000 with 2001 with the dot-com crash, and like it did in the great financial crisis, and like it did in 2020 because of COVID. But there is no COVID, and there's no toxic junk bonds for the housing crash, and there's no actual no end customer inflated bubble in the dot-com system, and instead it's a recession like the 1930s because the entire economy has gone to crap. That's what that would sound like. So they've chosen not to say it because history tells them that saying that would be very bad. And this optionality is a wonderful thing, because if they do then get to do the job without having to talk about the job they're doing, it might actually work. And this is the kind of the observation paradox that, like, from quantum physics that exists in financial markets, because we all know that markets operate on confidence. And even if confidence at the end of the day is sometimes a lie you tell yourself, the economy needs to be able to get out of the bed in the morning and do its damn job. And without that confidence, it won't do it. So it's not being undermined and not being destroyed. And that's why this is the story. That's why all the last episodes all fit together and come to this lovely little crucial end point here on lovely Christmas Eve. So we can wrap up the 2025 story. And by next week, we're looking at like stocks and things that we might want to invest in 2025 if certain things pan out the way that we hope that they pan out. With regards to the second goal, by the way, we've only got 3 out of 10 people taking part in it. What? Yeah, only 3 out of 10. Why is that? I don't know. But what I can see is that the people who take part in this are wonderful, amazing people, and that they deserve a big shout out. Big shout out. Happy Christmas message to all of them. So I want to big a big one to Dashi, who really got the ball rolling. Wonderful person. Happy Christmas. Thanks for being a part of the show. Vic Vince, great. Thank you for being a part of the community. A big lovely gentleman. We've got Nick G, another lovely gentleman who supported the show. John Biscuits, you know, dunk them in your tea time with John Biscuits. We've got Saucy who's supporting us by being a member. We've got Lisa, who was a wonderful supporter to the show, and actually sent me a happy Christmas message right at the very top of the show here and said happy Christmas, and give me, can you believe this, $50. That's right, Lisa, $50 in today's show, because she's Christmas. She's like she climbed down my chimney, and she gave me $50 because she's a legend. We also have, of course, we also have a course sale happening right now, which is $501 actually off the price of the course. The biggest ever saving that's ever been in the course, and if you want to take advantage of that, you should, while the opportunity remains, and be part of the cohort. When you're doing the course at the same time some other people are starting it, knowing that there's a sale, it's when obviously memberships are higher than they are other times, then you should do that, and you should be part of a group with some other people. Pardon, Jimmy? And you can pay in installments with PayPal credit. Pay in installments, PayPal credit, take advantage of the course. Cheapest time ever to do it. And of course, the course, my horse, will give you access to a community of people who've already taken the course and will guide you and help you become a better trader. Really, the course is just as much about your future as it is about looking at the information, the static information in the course, you know. They're tied together in a way because we use drills and so on to make it so that you're proactive and really engaging in your own future, but also we really encourage the community aspect of it, and it works very, very, very well. I want to give a big shout out to Kitties, of course, who is part of the goals that we've been doing. Crazy. Oh, did I mention the promo code? Yes, save 500. Save 500. Type that in. You save 500 on the course. Save 501 actually.
Happy Christmas, everybody.
That's Jimmy saying happy Christmas.
Some great shows this year. Real proper lectures, educating people.
Yeah, great stuff. For people have had great benefits from tuning into my show this year.
They know how to pick winning stocks.
Yeah.
How to manage risk on them.
Yeah.
And where everything fits in the economy, so they can give it an understanding of beyond just the numbers.
Yeah,
You've said to me many times, like, a stock will go nowhere without a story, you know, and you've given the whole economy a really good, coherent story.
Yeah. I think as well, like, stress exists where humans operate on stories. And when you're like looking to try and understand something, you can't put a story on it. It causes like real human, like on a biological 300 million years of evolution type level, stress. So this being able to name a thing and understand it works on a biological level. I think a lot of people got that
Being able
this
to put
year.
a name on it helps. Great Rocky outcrop.
Yes.
Happy Christmas.
Happy Christmas. And then as well, big shout out to L1 Mapan, Sasan, and Bocadillo, who've all been chipping in towards the goals on the fan funding stuff. Big shout out to our number one chatter as well, Dash EC. You've managed to win on 2 scores. Crazy, who was a donator as well, as number 3 on the live chat box. And Sasan, another guy. Great to have you here with us this Christmas. Merry Christmas to you all. Thanks, Rocky and Jimmy. Love and respect. Great message that he was sending. I think that's a great way to cap off the show on Christmas. It's Christmas, folks. As I said, the little boys and girls are super excited. Some of the big boys and grown-up boys and girls are super excited too. But there comes a time in everyone's life, and all the little boys and girls know it. There's a big old scary ghost. They'll knock on your window and then drag you into the past to talk about how your future is going to go. And we did that in today's show using the futures charts. Talked about the ghost of Christmas futures past, compared the futures charts to their own past to see what things were like. And I encourage you to do it yourself, because I do admit in the live show and in the ramblings and distractions and digressions, I didn't look enough at the past on the futures past charts to say back when this was happening, this was high. If the economy was like that then, you'd expect this to be high again, type of chat. And I would invite everybody to do that and think about, hey, there are some things happening right now, like copper being high while lumber is low, and that type of disconnect while gold is high and oil is low and Dixie has been dropping for a couple of months while people are risk off. Does it signal that we're either coming to the beginnings of a massive capitulation where these stocks like ES that are representing ES making them go all-time highs and NASDAQ and so on, are we seeing that to capitulate, or is this the last hurrah of a silent 4-year hidden cost of living crisis type of recession has been hitting you behind the scenes without you knowing it? And are we going to get the Trump president sort of term that people voted for happening in 2026 after a year of volatility and uncertainty in markets? Can we look forward a bit more security and certainty? Well, we have the metrics and the data and a little glimpse, a little torch, a push into the light. We've got a little bit more definition on those shadows dancing on the cave wall tonight, right? So hit that like button and the subscribe button, be a part of what we do next.